Hey, how's it going, everybody? My name is Troy Hackett. I am the head TA for accounting or managerial accounting for Cornell University, and more specifically for Professor Paz's class. So today we're talking about segment analysis, and I want to explain how it works. And to be honest, it's not that difficult. What's going to happen is that you're going to have instead of having one row of revenue and variable costs and CM and fixed costs and NOI, what's going to happen is that you're going to have multiple rows because you have multiple divisions. Okay, so it says here for this question that data for May concerning Dorrose Corporation's two major business segments, fiber and feedstocks, appear below. Right, so they gave us these figures for the two divisions, fiber and feedstock. And they say common fixed expenses totaled $345,000 and were allocated as follows: $186K to the fibers business segment and $159K to the feedstocks business segment. And it says prepare a segmented income statement in the contribution format for the company, omit percentages, and show only dollar amounts. Okay, so first thing we're going to do is we're going to write down revenue. So I need to get my pen out. So revenue, gonna have to white color. So revenue, and that is terrible handwriting. That is really, really bad handwriting. So revenue, and on the top here we're gonna have fiber, feedstock, and total. So instead of having the usual one row with these income statements, we're going to have three: one for each business segment and one for the the combination of both segments. So I'm going to draw little lines between them. There we go. That wasn't very straight. So for fiber, we're going to have $990,000, and I'm just going to write it as 990K because K implicates thousands. For feedstock, it's going to be 690K, and if you add those out for the total, we're going to get 1,680K, okay, or aka 1.68 million. Next, we're going to have our variable costs. So variable cost for the fibers is 455K, and for the feedstock, it's going to be 400K, and we add those up together, it's going to be 855K. As you can see, it's not much different from a regular income statement. You just have more rows and it's just a little bit more number crunching, but in reality, it's the same concept. It's not that much different. Next, we're going to have the CM, which is revenue minus variable costs. So if we subtract revenue and variable costs, we're going to do 990K minus 455. We're going to get 535K. And the feedstock is going to be 690 minus 400, which is going to get us 290K. And finally, for the total, is going to be 1680 minus 855. We're going to get 825K. And to check that total CM number, what you can also do is add the fiber and the feedstock CMs together to double check your answer to make sure it's correct and to make sure you didn't make any mistakes beforehand in previous rows. Next, we're going to have traceable fixed expenses. And for the fiber, it's going to be 99K. And for the feedstock, it's going to be 110K. Okay? So if we add those up together, we're going to get 209K. And our next row, this is where it gets a little bit different. We're going to have segment margin. Okay, so segment margin basically tells us everything we know for fiber and for feedstock, because past this we don't have traceable costs, we only have common costs, so we're no longer able to allocate it towards only fiber or only feedstock. So segment margin is basically, it gets you as far down as possible where you can allocate this cost specifically to those business segments before you're no longer able to do that and you got to end their income statements at segment margin. So we do segment margin and we do 535 minus 99, we get 436K. And for feedstock, we do 290 minus 110 and we get 180K. And we add those up together, 616K. And for our final, or our second to final line, we're going to have common fixed expense. And for this one, we're not going to allocate it to fiber or to feedstock. We're just going to put it in the total column because it is not traceable. Okay, so we're not able to, put it for only one business segment. Okay, so for the common fixed expenses, it's 345K. We're going to put another line here. Do 616 minus 345 equals 271K, and that is going to be our NOI. So it's pretty similar to like a regular income statement. You just have more lines, more calculations, and just, the number one thing where people get tripped up is that they forget about the segment margin and they allocate their common fixed cost towards, a specific business segment, which you can't do because they're not traceable fixed costs. So I hope this video helped. That's pretty much it for this prelim. Actually, that was the last question for this practice prelim. So if you guys have any questions, let me know. If you guys are in the spring 2023 class, you can always come to me for office hours. So yeah, I hope you guys enjoyed that video, and I'll talk to you guys later. Peace out.